Hi, this is Michael Talis with the Talis team, and today I'm sitting down with Sue Baker Dirickson, who is a mortgage broker with Guaranteed Rate Affinity. And Sue, please introduce yourself.
Good morning, Michael. Thank you for the invitation. As Michael said, I am with Guaranteed Rate Affinity. I've got 37 years of experience in the mortgage business, and I'm looking forward to sharing some information with you.
Sounds great. So why won't we start with an elephant in the room? What's with the interest rates? It's absolutely out of control.
You're right, they're high, but unfortunately, I think they're going to stay here for a while. The feds are trying to get the inflation rate down, and this is their attempt to do so.
So how long do you think that while will be?
My crystal ball isn't so great, but the anticipation is we're going to see rates hover here probably until at least, maybe June or so next year. We're hoping to maybe start to see some drop. Mortgage Bankers Association has come out with some forecasts that we should see lower rates maybe into the mid sixes by the end of 2024.
Oh, so for about what, 9 months? That's what the expectation is?
Right. The message from the feds is higher for longer. We're hoping that they're done. It is looking more and more like that is the case, that we're going to just hover in this range for a while. They meet again the next time we get the results on November 1st. Right now, the consensus is a pause.
Got it. For people who are looking for homes right now, what would be the best way to finance? Because I understand that the monthly payments are significantly higher than even at the beginning of the year. What kind of programs or what kind of features people need to look for in order to buy today?
Okay, so of course the big thing everyone's looking for is what can I do to reduce the interest rate? And there are permanent buy downs, which a buyer can pay for. They, pay additional fees up front in exchange for a lower interest rate. We do have some sellers that are willing to cooperate with us, where maybe they'll offer a temporary buy down. And there's many different types of temporary buy downs. But for example, a 2-1 buy down reduces the interest rate 2% for the first year, 1% for the third year. So with the forecast that we're seeing right now, those can make a lot of sense because most people are going to be looking to refinance if they're buying now. And when the rates,
hopefully it'll carry them through this high interest rate period.
Exactly. And that's why those tend to be getting more and more popularity as we go through the year.
So which programs are the most popular?
I think the
2-year buy downs, or give us an indication.
I think the one that is most popular is a 2-1 buy down. We do have 3 2-1 buy downs also, but those get very costly for a seller. And so it's a little bit more palatable for a 2-1 buy down. And the benefit to a buyer is huge. On $1 million loan, buying down the rate by 2% right now reduces the payment $1,200 a month on $1 million loan. It's significant.
Well, hopefully for most people, it's more than their grocery bill for the month.
True.
Well, have you seen the price of bacon lately?
Oh my goodness. Every time we go to the grocery store, everything costs more, right? That's what the feds are fighting to try to get that down. And they're making progress. It's just really slow.
Yeah, that's what I hear, that the progress is not as fast as it was originally expected.
Exactly.
A lot of people I'm working with are first-time buyers. So is there any help for specifically first-time home buyers?
There are quite a few different first-time homebuyer programs available in the marketplace. And so some of them are geographic, whether or not the property is located within a census tract area that a particular investor may be targeting. We can have things with small down payments, as little as 3% down on a conventional loan. There are some programs that have down payment assistance. There are lots of options. That's why it's really important that you talk with a professional located where you're looking to buy, because these are sometimes city specific, other times county. You need to deal with someone that's very familiar in the area you're looking to buy. A lot of them will have income limitations as well. So there's just lots of things to consider.
And you're working with a lot of these programs, right?
Yes, we work with all of the various programs that are out there right now.
That's a lot of variability.
We have to stay on our game for sure.
Give us a sense of the loan amounts that these first-time homebuyer programs will cover.
The majority of them are targeted at what is considered the conforming loan amount. Now that varies also from county to county. But here in the Bay Area, the 7 Bay Area counties, we are considered a high cost county. And so currently that limit takes a loan amount up to $1,089,300.
And that's for all counties the same.
In the Bay Area,
Right,
yes.
in the Bay Area.
But if you get farther out, then those limits sometimes are much lower. So another thing you need to definitely check on where you're looking to buy, what might be available.
And do these programs have any specific requirements for the type of the property or condition of the property, or it's more or less generic?
Condition is a concern for most lenders. They want to make sure that the property someone's buying doesn't have any what would be considered health or safety hazards. But other than that, I mean, just because a property is older doesn't mean we wouldn't be able to loan on it. We absolutely could, as long as there's no health or safety hazards.
First-time home buyer programs, are there anything specific to these programs comparing with the rest of the loans, or requirements are more or less the same?
A lot of them are the same. However, the ones where we can put a first-time home buyer in where they're under a particular limit in a county where they're offering a home buyer program can reduce the interest rate, sometimes as much as 0.5%. Fannie Mae and Freddie Mac a year before last put in what we call LLPA in the industry. It stands for Loan Level Price Adjustments. And for someone that fits a first-time home buyer situation with income under the county limits for the program, those are eliminated. And so by eliminating those, it in effect reduces the interest rate, depending upon the buyer, anywhere from 1/4 to 0.5%.
Wow, that's a huge saving.
Right. It does require that they take an 8-hour free online homebuyer education course, but it's worth the 8 hours.
So it's like a driving school for home buyers.
Yes. Go in being educated with what you're getting yourselves into.
That sounds interesting. A lot of consumers who are shopping today are first-time buyers. That's what we're focusing on that so much. If you are starting the buying process, I typically recommend one of the first steps is to talk to a lender. So what will it take? What kind of information you will need from these first-time home buyers in order to start pre-qualification process?
Okay, so the first thing that we would need to know is where they're looking to buy and what is their income. Okay, so that we can see if they fit into any of these special programs. And then the next thing will be, what do we have to work with for a down payment? With just that basic little information, it gives me some idea of what the direction will be and what we need to take. If it looks like they're going to fit into some of these programs, the first thing I usually recommend that they do is take the online course.
Okay.
They are required to provide us a copy of the certificate once they've
interesting.
completed. Okay, we put that in the loan file. And then the next step would be to go onto my website, place their application, and let's get the pre-approval process going so that when you go out and you start to look at property, if something comes up, we're going to have them in a position to be able to make an offer.
And that also will help you come up with the realistic expectations in terms of what you can afford, and then we can search specific areas where these type of properties are more common and more available.
Right, and part of the information that I'll provide is, okay, what is the purchase price? What is the down payment? How much are closing costs? What does my monthly payment look like? What is the interest rate? I can provide all of that information so you're going in educated and comfortable that when you find the property, you already know, okay, yes, I can afford it. This is manageable to me.
Well, that's one of the things, Sue is absolutely right. Converting this amazing price or crazy high, when you think about $1 million price tag or even more, it's hard to make sense of how much it will really cost me.
Right.
Converting this purchase price into, we call it PITI, principal, interest, taxes, and insurance,
Right.
helps you put kind of a sense on how much it will be. I have to budget in order to afford this
Right.
home on
Exactly.
monthly basis. Most of you get your paychecks monthly, and comparing that with the PITI or your monthly cost of ownership makes more sense, and you can figure out if you still have space for your hobbies, travel, family time. You don't have to put all your money into just housing. At least that would be my recommendation.
Right, right. And of course, you're going to have a tax advantage to it too. So you want to make sure that you're taking at least some consideration for that too.
Right. In terms of documentation, what kind of documentation people need to prepare in order to apply for a loan?
So if someone that's a W-2 employee, we would need their pay stubs for 30 days, their W-2 forms, quite often just for 1 year, other times 2, depends if they have miscellaneous income, such as overtime, bonus. We see a lot of restricted stock units, RSU income in our area. And then 2 months bank statements.
2 months.
That gives me everything I need to be able to prepare a pre-approval.
You don't need previous year tax returns or anything like that.
On a W-2 person, if they don't own any other real estate and they're not self-employed, I don't need tax returns.
Got it.
When we do our upfront pre-approvals, we're only doing a soft pull on someone's credit report. So it's not a hard hit, which is a concern for some people. That's not the case with all lenders, but that's how we operate.
One of the things that we talk with my clients is if they want to shop for a loan and they want to do hard pulls, they have to be timed close together. Is it correct? What's the time limit on that?
That is correct. For a hard hit, it's within 30 days. Any inquiry done into your credit within a 30-day window only will count in your score as one inquiry. But you get 32 days, it's a second hit. Right.
So, and second hit means that you're shopping for multiple loans as opposed to shopping for a rate or a specific program.
Right.
When we start working with our clients, in a lot of cases, we sit down for a buyer presentation. It's really critical for people, especially for people who are buying first time in California. They may have experience from other states or even other countries. It's really critical to understand how real estate works in our area. We have a little different rules and things are done a little different even from East Bay or Sacramento area. What would you cover when you start working with a new client?
Okay. So other than, of course, their personal financial information, the one thing I always want to know is where they want to buy. And I explain to them why I asked that question. So because even in California, buying one county to the next, things vary as far as who customarily pays title and escrow fees.
That's true.
And when I'm working up figures for someone, I typically like to show them worst case scenario. So quite often it seems like in our area, we have people wanting to buy either between Santa Clara County and San Mateo County or Santa Clara County and Alameda County. And in Santa Clara County, the buyer and seller split a lot of the title and escrow fees. In the other 2 counties I mentioned, the buyer pays all the title and escrow fees. So I explained to them, okay, this is the case. And then once I work up the figures for them, because I'm going to show them the worst case, I'm going to show them whatever was the highest cost county. And then I'll let them know, okay, if you buy in Santa Clara County, your costs are reduced by $3,000 or $4,000 or whatever that might be. And then the other thing, we go down to city. There are some of the cities that have a city transfer tax.
Right.
Others do not. So if you're buying in a county, in a city with city transfer tax, I want to show you that too, so that you're not surprised when you go to write an offer and now your closing costs are higher than what you've anticipated. Those aren't, we'd rather have the surprise where they're less.
When you're shopping for a loan, how would you evaluate different programs? How would you compare them side by side, and what kind of terms you need to look for in order to say that this loan is better versus some other?
Okay, so I always ask someone's plan. You know, how long do you anticipate staying in this home? That's one thing. And then whether we pay points or no points. So points are basically prepaid fees in exchange for getting a lower interest rate. Okay, so the IRS has decided that paying points is considered prepaying interest. They are tax deductible. Okay, so that's a benefit.
So the deductible first year when you pay them?
Right.
Okay.
When you pay them, yes, on a purchase.
Okay.
Okay. However, the other thing we have to think about is, are interest rates at a point when I'm financing that I'm going to keep this loan long term? Or am I going to refinance it in a fairly short period of time, meaning say less than 3 years?
How would you know?
Well, you don't always know. However, right now, pretty good indication that rates will be lower in the next 12 to 18 months. So paying points doesn't always make sense unless it's the only way someone qualifies. If someone needs the lower rate in order to keep the qualification in range, or in order to keep the payment where they're comfortable, then that would be something that in that case, it makes sense.
So it's basically trading cash for cash flow.
Right, exactly.
And
Yes.
that makes sense. So, Sue, how would people get in touch with you? What's the best way?
The best way is either to give me a call. I'm going to just give my cell phone number because that's the easiest way to reach me. And you can also text me. That's 408 309 2406. You can also go online to grarate.com/Sue Baker Dirickson. You'll go to my website, or you can always send me an email as well.
And I will have all this information in the description of this video. So you will be able to get in touch with Sue anytime.
Absolutely.
Well, thank you for watching. I appreciate your time, and hopefully you learned something new and positive. And if you have any questions about real estate anywhere here in the Bay Area or any loans, I assume that you're mostly working in the Bay Area, right?
Primarily, but I'm licensed in California, so I can do loans anywhere in the state.
Okay, so please get in touch, and I hope we'll have a chance to work together.